All right. Welcome to the Bottom Line Live. I'm excited to have you all here. We've got people on Zoom. We've got people watching on Facebook Live. I'm going to share it to Wealth Dynamics page. Wealth Dynamics. And then I'm going to start talking about financial planning. Every week I do one of these and we talk about different topics. One thing that I do want to talk about as well, I'm going to be doing a whole talk on it next week, but I just want to touch on it a little bit, is that, oh, let me turn on my lights here better. Here we go. I want to touch on it a little bit, that we are almost at the end of tax season. So basically, if you extended your taxes, which I know a lot of my business owners that are clients of mine did, the S-Corp taxes are due September 15th, and then the personal tax returns are due by October 15th. So every year I have people come to me in like August and want their taxes done. So keep this in mind, guys. If you want, your CPA is going to want your books ready, like latest, the beginning of September. So if you need bookkeeping done so that you can get taxes done for your extension, reach out to me now, because it's going to get to a point where it's going to be first come, first serve, and I might not be able to fit you in before, the beginning of September. So I did just hire 2 new bookkeepers. I'm also hiring a customer service rep to help on all this, but I had to hire those bookkeepers for work that I literally already had. So if you need your books done, I'm just reminder, now is the time. Waiting until August is not a good idea. Not even just for me, like all bookkeepers, we get pretty booked by then. So come now so we can get it done in relatively enough time. If we have July and August, we should be okay. Good, depending on, how much there is to catch up. So now is the time. Also, if you haven't done tax planning yet for 2022, you need to do tax planning for 22. It's almost like time to do tax planning for 2023 in a second. So if you haven't done that, reach out to me. I can connect you guys up with Tax Hive, and they do tax planning. That's who we're using right now for tax planning. If that's not the right fit for you, I have other CPAs I work with as well. But if you come in January and you want to know how to pay less taxes for 2022, you're not going to be able to save yourself a lot of money at that point. So now is the time to do the tax planning. And if you haven't done your bookkeeping yet for 2021, now is the time. It was the time earlier, but now is really, really the time, or else you won't get it done on time. Okay, and without any further ado, let me launch into talking about financial planning. Let me just check my chat here and see if anybody has any questions. Oh, I just have some hellos. Hello, everyone. Okay, so financial planning. This is something I get asked about all the time. It's a service we do offer for our full service clients. What we do for them is basically we'll do their bookkeeping for the whole week, and then we will, every week, and then we'll get basically a plan, like, okay, so here's what we need to set aside for your reserves, for all these different things that are coming up. Here's what your payroll is. Here's what your bills are. Here's what's left based on your income for the week. So there's a lot of things about that are just very common sense, but that get missed, that makes financial planning impossible. I have people that come to me and say, I've been trying to implement financial planning into my company for years and I haven't successfully done it. And I've gotten to the point where now I can look at what someone's doing and know why it didn't work. So I wanted to share some of my hard-earned wisdom with you all. So one of the things that I want to explain, what is the difference between financial planning and budgeting? Because this is a question I get asked. So budgeting is what happens when you create a plan, let's say, of what you'd like to spend for the year or the month or whatever it is. And at the end of the year or the month, you go and look how close you were to what you budgeted. Now, you can do budgets more strictly where you only give yourself a certain amount of money and you can't spend more than that. And that is one way to look at it. But when you think of a regular budget, a government budget or whatever a budget, it's not very proactive. There's a little bit of proactiveness to it in that you kind of come up with, what are the amounts that I'd like to spend this year? And there's some value in that. Maybe you know that you made this much money, and so you need to spend a certain amount on marketing in order to have money come in. Like, there is some value to that, but honestly, not a lot of value, because what if you don't make enough money to pay for that? Or what if you make way more money than you expected and then you don't budget enough for marketing, right? So budgeting is usually looking at what you did after the fact. How close did you come to what you estimated? That's not super useful. What is a financial plan? A financial plan is coming up with what you are going to spend beforehand based on money that came in and then spending it according to plan. There's a lot more to know about that, and I obviously can't give you a full training on everything that there ever has been said about financial planning in this 30-minute webinar. But I'm going to tell you, why it's important and what are the pitfalls that I've seen. So again, let's look at that. So financial plan. So you're taking money that actually came in for the week and planning how you will spend it. And we're not just, when I say spend, I don't actually mean spend, I mean invest. So you're taking money that came in for the week and you are planning how you will invest it in order to make more money. What does that mean? Okay, so you know that you have payroll to pay. At that moment, you have to look at your payroll and determine whether that's a good investment. Usually payroll is a good investment because if you don't pay your payroll, your employees are going to quit, right? But what if you go, okay, I made $50,000 this week. I make $50,000 on average in a week, but my payroll is $45,000 every week. There would be something wrong there. That might not be a good investment. You maybe need to look at you got some efficiency that you lost there because that's not profitable. You can't live if 95% or whatever the math comes to of your income goes straight to payroll. You won't be profitable. You won't be able to expand. So there's something wrong there. Maybe you have too many employees for what you're doing. Maybe your employees are paid too much for what they're producing. I don't know exactly what it is, but that's the point of view that you have to have when you're doing your financial planning. It isn't, okay, let me just look at my bills and my payroll, right? It's, what am I investing in to make more money, to make profit? You have to invest in marketing. You have to invest in employees. You have to invest in paying your rent so that you have a building. But do you guys see what I mean? It's not just, okay, what do I expect to spend it on? Did I spend it or did I not? And this is why it's important, because how many of you really look at, like, I look at my profit and loss on my QuickBooks probably almost every day. I run my stats on it. I'm looking at my KPIs. Okay, how much money came in today? How much money came in yesterday? Okay, what is my value of what I delivered? Did all that bookkeeping get done? I can see all that from my P&L. And I look at it, I usually personally look at it accumulative for the month. So I want, so I'm constantly looking at, okay, how do I compare to this month, this week, last month, stuff like that, right? And I can tell a lot by looking at my P&L. But then I also every week do a financial plan. So I sit down, I have this spreadsheet. Okay, how much cash came in? It's in the bank. How much right away went out to merchant fees, credit card fees, whatever. QuickBooks Online charges me fees. Stripe charges me fees in order to receive money from people. So that already is gone. It's not spendable. So you just make a note, you know, merchant fees, it's gone. Great. What is left? What's actually spendable? Let's say you're a franchise and you have to pay your franchise fee out. That's not spendable. That comes off the top. Okay, now what's left? It's in the bank. Go look in the bank and see that that much money is there. And then you go, great, now it's time to get down to brass tacks. What am I investing in? So here's what it looks like. It looks like I have payroll. It looks like I have, but okay, sorry, before you even get to payroll, on the top, you're gonna have what's going to my reserves. What, always pay yourself first, right? So for a company point of view, you need to have your 6 months of reserves. I mean, I don't even have that yet, but like we're building it, right? Business owners. So you need to be putting your money to reserves. You need to be putting money to what you decided. Like, do you have a tax set aside account? Do you have a tax set aside reserve? Or do you get to the end of the year and your CPA says, okay, I need $35,000, and you go, shiitake, I don't have that money. Let me figure it out. No, you need to have a reserves. You need to have a tax set aside reserves. You need to have, you know, all these things. So you do those first. And then good. Now you've got your payroll. Now you've got, you know, bills, and then you've got purchase orders. This is something I went over with a client recently. He had his employees, basically they would do an inventory at the end of the week, and then they would need new supplies by Monday. So he would just put it on a credit card every week. And I said, well, that's not going to work, because then you can't purchase order it. You can't financially plan for it. So what you actually have to do is you need a purchase order, and then you approve that in your financial plan. And yes, it's something that you have to approve. So, you know, because you need those supplies for your customers, for your inventory, but it has to be approved, because otherwise you're spending money without any control. And what's the whole point of a financial plan? Is that you are controlling your money and you are investing it for growth and expansion and more profit. So if you're not controlling it, I know you guys know how this goes, because this is common. This is not just me. This is not just my clients. This is everybody. You spend that money. It's in that bank account. You have stuff to spend it on as a business owner, even as an individual. You know, you need your car breaks down. You need new tires. You need the new pair of shoes. Your kids need something. It's like the money's just gone, and you get to the end of the year and you don't even know. You're like, holy moly, my books say I made a lot of money, but I don't know where the money went. Or maybe I know, but like I don't feel in control of it. So how do you get in control of your money? You plan it. Okay, let me check. Does anybody have any questions so far, or anything that they want to ask me? Let me go back to my meeting thing here. Okay, we don't have any questions. We have people live. This is awesome. Okay, so what is one of the biggest pitfalls that I have found on financial plans, other than people not doing it, right? But when people tell me I've been trying to get this in my company, and every time I try, it doesn't work. So here's the thing, guys. In order to not spend that money before you plan for it, before you make your financial plan, you have to have a separate bank account where all the income goes in. Dun, dun, dun. Here's how it goes. And I know some of you guys are doing profit first, and some of you are doing all different kinds of plans, and that's all fine. None of that has to change. You have, you know, some of you have a payroll account or an ops account, an operations account, whatever. None of that has to change. But if you don't have this already, you have to open a bank account that all of your income goes into, that you don't spend. You don't have a debit card for that account. You don't have a checkbook for that account. The only thing you can do is transfer money out of that account after you do your financial plan into your other accounts. So whatever the amount is that you set aside for reserves goes into your reserve account. Whatever the amount is that you set aside for payroll goes into your payroll account. Whatever the amount is that you set aside, or that you FP, financial plan, for purchase orders goes into your operations account or your main account, whatever that is. But you are not allowed to spend any money out of that bank account, because here's why. if you have your income going into your regular bank account, your regular, your main operations bank account, whatever you call it in your business, or if you, let's say you only have one bank account. I know I talk about a lot separating out your business and personal accounts. And this is true. This is when you first start your business, you at least need to have a separate business and personal account. But once you have some money running through there, at that point, you need minimally an income account and your other accounts, whether that's one other account or however you want to do it. But minimally your income account, and it has to be separate because you will always spend the money. And even if you try to do a financial plan, but you have all the money going in and out of one account, you will never be able to see if all the money for your financial plan that your books say you made that week is even there, because you spent some of it on payroll and you've got money still coming in from things that were paid yesterday. So the only way that I've ever seen, and I've never seen anyone successfully do this without it, is to have a separate account that you only have for income. And whether you're getting paid by check, whether you're getting paid by credit cards, whether you're getting paid by insurance companies, you give them that account information and they pay it in there. Might it be a process to get it sorted out because you're getting payments from all these different places and they all have a different bank account number? Yes, it might be a process. It might be a pain in the ass to do it. It's true. There's nothing I can do about that. In the meantime, you have you do your workarounds. If money comes into the wrong account, you transfer it into the income account. Whatever you need to do, but you don't spend it. It just sits there and collects money. You also can't financial plan on money that's in the mail, money that's coming in from a wire, or money that's still in transit from a credit card. You can't financial plan on that. You only can plan on money in the bank. So whenever your weekend, some people's weekends, Thursday night, some people's weekends, Thursday at 2, some people weekend Friday night, all the money that came in by Friday night came in the bank. Then when you do your financial plan on Monday or over the weekend or Friday, whenever you do it, you financial plan with the money in the bank. If a client tells you they mailed a check, great. As soon as that check comes in, you can do a financial plan with it. If someone told you they wired you money, great. As soon as the wire hits your bank account, that week you can do a financial plan with it. But you cannot do a financial plan with money that's in transit, because what if it doesn't come in? What if the check gets lost by our US postal system? What if the wire person had a wrong account number and it got bounced and went back to them? It happens. So you can't count it until it's in. Or sometimes, guys, if you do receive checks in the mail, how many times have you said, hey, where's that check? It's been 2 weeks. And they go, oh, I found it in my outbox. Sorry about that. I'll send it out today. And then if you already did a financial plan on it, you wouldn't have a real financial plan. And I've seen people do all kinds of crazy spreadsheets and machinations, like to somehow do it. And they go, well, we're going to borrow from our financial plan for next week, and this is the money that has to come in. And it never works. It never works. And this is why people feel like it's just an administrative exercise as opposed to an actual planning tool. So, and this is not something I talk a lot about. It's not something that, I'm trying to sell to everybody. It's really only a service I can provide if we're doing full service bookkeeping for the client, because we have access to everything we need. We're running the payroll. We can do, the bookkeeping for the week. We can see exactly where the income is. So I've had people come to me and ask me to do financial planning for them individually to help them. I don't refuse to, but I charge a lot of money for consultations for it, because it's also a little stressful when you're first setting it up. It's, kind of daunting, and you realize how much money you really need with everything that you need. So it's not specifically something I'm trying to sell to everybody, right? I'm not doing this for that. I'm just here to give you guys some advice and tell you the pitfalls that I've seen. So, and that is the number one, counting money in that isn't in yet, that you can't financial plan, and not having a bank account where the money just sits until the end of the week. And sometimes it can be hard when you're transitioning over from having money constantly moving in and out, where you know there's going to be more money coming in, so it's okay, the money goes out, to not spending any money until you do a financial plan. It can be a little bit hard, but guys, if you don't do it, you don't have control over your money, and you get to the end of the year and you just paid your bills because they were getting noisy, and the rent has to get paid, and the vendors have to get paid, and the payroll has to get paid, and you don't really know, you don't have any control. So that is the main difference. Okay, I've got some questions. Michael asked, what is the most common reserves that people forget? What are the most common growth opportunities that people are missing? And Dana asked, will this be recorded and have a replay? Yes, this is being recorded, and it's going to be, I don't know if it's Dana or Dana, but this is being recorded. It will be on my YouTube page in the next week or so, and also on the Wealth Dynamics YouTube page. I'm not necessarily going over the exact steps here. I'm just going over the importance and the pitfalls. So if you do want to set up a consultation, you can do that. I do charge a lot because it is quite a process, an emotional process to do it, but I can help. Okay, so Michael, back to your question. What is the most common reserves that people forget? So I think that reserves can be individual to individual as far as companies, like what is important to them. You know, there's a few different things, right? So you want to have a reserve always, just like a reserves for in case something happens reserves, like a normal reserves. And that can be, you know, 5%, whatever you need that to be. You want to have a reserves for taxes, because you're not thinking about taxes throughout the year. And as a business owner, you don't have taxes coming out. You do if you're an S Corp owner and you have taxes coming out for your W-2, but that's not enough taxes to cover all the taxes for your whole company. So you should work out with your CPA, you know, what are your projected taxes, or just use a really big number, like, you know, 15% of revenue or something. But it might be less. It might be 5%. It might be 10%, right? If somebody asked me, what should I put aside for taxes? I would say 15 to 20%, just because on top you'll be safe. And worst comes to worst, you refund yourself at the end of the year. And if you're doing something cool with your reserves, like putting it in your sacred account, then you're actually making money on that, and you're paying yourself interest. Whereas if you overpay the IRS, you don't make any interest, what they do. So tax reserve, just like a regular reserves. And then you also want to have like an expansion reserves, right? There's different things you can call it. You can call it your building fund, whatever, right? But just general common sense knowledge, you want an expansion reserve. So there's things that you might need in order to expand. Maybe there's equipment that you need. Maybe there's a building that you want to buy. So you put money in there so you can use that to expand. But it is an individual thing. I'm not specifically relating this to any specific methodology. I'm just talking about a very general financial plan. You know, we all know you always pay yourself first in a company. That means you always put money into reserves first. And then maybe that includes, you know, paying the owner. There's different ways you can do it, because I wouldn't say that it's a good idea to pay yourself a large amount of money and not have enough money for payroll, right? So there's different ways to do it. A lot of business owners pay themselves what the profit is at the end. But for instance, there's business owners who very smartly pay themselves a certain percentage as a set aside on top. That's like, you know, 10% to management, and that just goes to their personal account. Then they also get their salary. Then they also get, you know, if there's any profit, like after you do your set asides and reserves. The whole point of this is that you need to make more money. You're never, you know, maybe you're perfectly comfortable with the amount of money you're making, and that's fine. But if you really sit down and do a financial plan and work out all the things that you should be paying for, all the things you want to be paying for, how much you personally want to make as a business owner, you will find that it's way more money than you're currently making. And that's a good thing because you need income demand. So when you have income demand, when you have more things that you're trying to pay, you will have more income demand and you will make your company make more money. If you're comfortable, you're not going to make more money. So that's a very important purpose of a financial plan. Like if you're like, okay, so I need this money to go to reserves and I need this money to go to management and I need this money to go here. Oh my gosh, I only have 5,000 left and payroll is 4,500 of it. Okay, but you paid your reserves and you paid payroll, and that's going to give you income demand, because then you're going to realize if you always have, let's say 25% that goes all to all your different reserves accounts, and you only can financial plan with the other 75%, you are going to wire your brain to make more money because you're going to have income demand. There's no other way about it. I mean, no, you can just like fall on the floor in a puddle and cry. You can do that too if you want. We have our moments. But for most business owners and entrepreneurs, even if that happens, you pick yourself up and you go, okay, how do I make more money? I need to make more money in order to expand my company. And that's the purpose of this. You are investing. What are you investing your money in to make more money? So, okay, hopefully I answered those questions. And again, I'm not giving like an entire process of how to do financial planning because I don't have enough time, and I'm not even using any specific methodology. I'm just talking in general. And why is it important? What are the pitfalls? And I could talk about this for a long time, but I'm like down to my last few minutes. So if anybody has any questions, any other questions, feel free to write them right now. Also, like I said, I can do consultations on this. I can help people set up financial planning. If you need that, reach out to me. But in general, like I'm really telling you guys for this because every business owner should do it, regardless of the size of your company. And even whether you have a hobby company where you just made $5,000 on jewelry, or you're making $10 million a month, you need a financial plan. You know you need a financial plan. You want to invest in your company in order to make more money. Even if you're not trying to be a hoarder and keep it all yourself, you want to pay your employees more. You want to be able to do more cool things. You want to have an awesome team. I know I do. So it's not even all about how do I make more money so I can be selfish and take it home. I mean, take home as much of it as you can. But how do you build? How do you help your community? How do you use that money to help your employees, to help them build their communities? It's this beautiful thing that just spreads out and out and out. But if you aren't controlling where the money is going, it's just gone and you don't know where it went or why it went. So if you have any questions or you need any help, feel free to reach out to me. My email is maya@solvencynow.com. You can go on my website, solvencynow.com. I can also probably send you, to resources where it talks more specifically about it. And also I'm on Facebook. I'm on Instagram, Maya Weinreb, Solvency Now. I'm on LinkedIn under Maya Weinreb, so you can reach out to me. I'm easy to get a hold of. And just to reiterate, if you haven't done your 2021 bookkeeping yet, now is the time. You're at your last possible limits. If you haven't done it yet, get going. If you haven't done your tax planning yet for 2022, now is the time. So those things are very important. And as an individual, as a business owner, plan your money. The first step of being able to plan your money is knowing how much you made and for the week, not spending it. But this is what you need bookkeeping for, because you have to know how much money came in. You have to know in the past, where did it all go? Because if you're trying to create a financial plan for the future, you have to be able to see where you spend your money so you can create that. So you need bookkeeping for this. It's really hard to do based on just a piece of paper and a pen without looking at any numbers. So bookkeeping, financial planning, tax planning in order to save yourself money on taxes. Now is the time. Okay, thank you all for being here. This is going to be on YouTube and on my new website that is coming out. And again, if you have any questions, feel free to reach out to me. And I will see you all next week on The Bottom Line Live. Thank you all. Bye-bye.